Hello and welcome to On the Record, a debate-style television talk show where Bahamians will find the balanced, true and open debate they've been looking for. Banking was founded by an order of much-feared monks called the Knights Templar. They were the creators of credit and loans, and they also secured cash and valuables for travelers. Well, since the days of the Templars, banking has obviously evolved tremendously. The Bahamas has had a great banking reputation over the years, with standards admired and revered in the region. Lately, though, our banking industry leaves much to be desired. Commercial bank branches are closing down in New Providence and in the Family Islands. Customers are being made to pay what seems to be astronomical fees for simple cashing checks, and essential services are being discontinued. Our offshore banking industry has also hit an all-time low, and as expected, the nation is very disheartened with the entire banking industry. Tonight, we discuss the Bahamas' financial industry, a business dying to survive. Our guests are Jennings. He's the president, that is, of Commonwealth Bank, and also chairman of the Clearing Banks Association, along with Mr. Barry Malcolm, former managing director of Scotiabank and currently president of Sun Cash. It's all on the record. I'm your host, Jerome Sawyer. Our discussion begins on the other side of this break.
On is here. Rev Go Play. Go everywhere with Rev Go.
Is your loved one celebrating a birthday? Or maybe they're commemorating a special occasion and you don't know what to get them? Why not get them something custom made from Executive Printers? At Executive Printers, you can create personalized calendars, greeting cards, and even playing cards just for them. A one-of-a-kind gift. They can even do personalized cups, mugs, keychains, coasters, and notepads. So come in and place an order today. We are located on Jerome Avenue South, or log on to epbahamas.com for more info.
Welcome back to On the Record. Our topic tonight, the Bahamas financial industry, a business dying to survive. Our guest, Jennings, who is the president of the Clearing Banks Association and also president of Commonwealth Bank. We also have a well-respected financial expert in Mr. Barry Malcolm, who's the former managing director of Scotiabank Limited and currently president of Sun Cash. Gentlemen, welcome to On the Record.
Thank you.
We had this show in our lineup for later this year. But in light of all that has happened in the past week or so, specifically with RBC, we thought this was a good opportunity to bring this discussion forward. And since then, RBC has landed back in the media with some comments, and that's how I'm going to begin this discussion, because I think that's what everybody is probably talking about. Tim Ryder, who's a senior vice president for sales in the bank's Caribbean arm, was recently speaking at Royal Fidelity's Bahamas Economic Outlook. I want to start with his comments, because I think what he has said will lay the groundwork for this discussion. Should RBC be committed to the Bahamas if the Bahamas is not committed to its own success? He notes that poor fiscal controls, outdated lending laws, corruption, substandard education are all impacting the banking sector. Seems very harsh, but is it true?
I think first of all, you have to really look at the context of the comments and take away the RBC connotation and look at it as an independent messenger on what is he saying. And unfortunately, many true things are very harsh when we hear them. But if we just take, for example, the comments about education, those comments are nothing new. I mean, there have been various ministers of education and the population at large have been expressing concern about the state of our educational system for years. We keep talking about a D average. And I think, first of all, we have to recognize the fact that there are exceptional Bahamian students, but we're talking about the average student and the average outlook for somebody who's leaving school. We've talked about social promotion over the years and about the need to eliminate it. As a bank, the Commonwealth Bank, as a Bahamian bank, when we have applications for vacancies, we go through tens, maybe hundreds of applications before we hire anybody. And the reason why is because they don't meet the grade. It's a very serious social problem.
There was a time when folks would come out of high school and go straight into a frontline position in a bank. But later on in his comments, he says, you know, RBC, again using him as an example, they're having to hire college-educated Bahamians to do basic banking practices.
I think I would tend to disagree with him on that particular point, in the sense that if you look at that, that's a worldwide trend. If you go back to, I mean, when I was first thinking about becoming a banker way back in the 70s in the UK, they were doing the same thing. That people were leaving high school and going straight into banking. But at that point, the Institute of Bankers was looking at upgrading, and they were saying that the future of banking requires college entry students. And so from Commonwealth Bank's perspective, when we hire somebody, we don't look at them as being a teller forever. So we look at getting the best equipped person that we can for that position. Now, we have to recognize as well within our system that there are a lot of people who cannot afford to go to college. And for those people who are getting hired who are not college students, they're the ones that we're looking at, the exceptional students who don't have the opportunities. So while I disagree with him as a general point of saying that they have to hire college students, I think it's a trend anyway that we need more advanced, educated people within the banking industry. Our trend as we continue to move forward is that, as I say, with Commonwealth, we're hiring people at the teller level to promote up. The banking industry has to find a way to promote and develop Bahamians to be able to take the top positions in the future.
I'm happy to hear that you're hiring Bahamians. Yeah,
well, I mean, again, I mean, you know, it's no secret that Commonwealth Bank is a fully owned Bahamian bank, 100% owned, 100% Bahamian managed. And if you look at even the offshore bank, when I say the international banks, you see more and more Bahamians are moving their way up at the organization. Now, you've got multiple things happening within the international banks, as obviously as you reference with the RBCs and to the lesser extent Scotias and CIBCs pulling back and you know, they're following a mandate that's being laid down by their head office that they have to follow throughout the Caribbean, not just the Bahamas.
I want to stick a pin in that because I want to talk about that in another context. But before we get to that, I want to go, Barry Malcolm, I want you to get in on this. Not just the poor education, poor fiscal controls, outdated lending laws, corruption.
The comments that were made are fairly harsh, but I think there's a strong element of truth to the comments, which is why they have resonated. I harken back to the National Development Plan that was done really by the previous administration, or at least initiated. But in that plan, there is a very powerful diagnostic on where we are as a country. Where are we in education? Where are we in terms of fiscal development? Where are we in terms of the capacity of the country to really put in place and maintain the structures to be competitive in today's market? And one of the compelling components or already diagnoses of that study was a consistent thread that if you measure any of the key indicators for progress in a country, whether it's education, whether it's outturn and capacity of students in a work environment. A lot of those indicators suggested very strongly that while many of our Caribbean competitors are trending up, the Bahamas is either flatlining or trending down. That's concerning because in today's world, we have to take, and he's right in this sense, we have to take responsibility for the development of our country. And that starts with the education process. That starts with ensuring and insisting and doing the things, making the investment to ensure that we do get a better quality of capability coming out of the classroom and coming into the workplace. That is critical for success in this environment.
To what extent, I keep going back to this, is the corruption and the poor fiscal responsibility, to what extent are those things impacting industry, and is this a real concern? Particularly when you have even the sitting Prime Minister, who would have spoken to CARICOM some months ago and by his own words admitted that we have a corruption problem.
Corruption in any society represents cost. Corruption in any society represents a diversion of resources from where they ought to be utilized to another source. That diagnosis on the Bahamas has come from multiple sources. I think it in part informed the last election, not the only issue, but certainly that was a very big factor, and it resonated. I think it resonated because there are strong elements of truth to it. If I have to go in to get licenses for whatever business, and a part of my cost of those licenses is not only the fees paid to government, but keeping persons who process those licenses for me happy.
Under the table,
that's a real cost that factors into what I have to invest, what I don't have to utilize in my business, and it spills over into many areas of the company. It has a real cost that impairs growth and development and proper use of funds in a work environment.
How did we get to this point? I remember in the 80s we led in the Caribbean, in the world, in banking. I mean, it is the second pillar of our economy behind tourism. It is responsible for the creation of a strong, in many instances, in a strong middle class. How have we allowed ourselves to slip into this position, and as you said, either flatlining or spiraling downwards?
I think you really have to look at the changes within the global economy. In the 70s and 80s, it was the Eurodollar lending, offshore banks that were driving growth, and that's really where the establishment of the second pillar came from. 80s, 90s, that's faded away, and now if you look at the global environment, you've got the OECD that are continuing with their various blacklists, grey lists and whatever that are really hammering away at offshore jurisdictions, that they are aiming to recoup as much tax revenue as they can, and they see jurisdictions like the Bahamas as being leakage. And if you look and see what's happening with FATCA and CRS, that are global initiatives, it is really damaging the Bahamas. It's common knowledge or common anecdotal statement, it's harder to open a bank account for a normal Bahamian than it is for an American. And why is that? It's because of the weight of regulatory force that's being established through these international organizations, solely designed to recoup tax revenue back into their jurisdictions. So once you take away the offshore side of the equation, you're then really coming back to the domestic side of the banking industry. And while the domestic side has always been important, if you go back to when the second pillar was established, it never had the revenues and the salary levels that the offshore sector had. So part of that problem is coming from global change. I think the other thing has been that we're a 40-plus year country, which really means we're a very young country. And we're making some of the mistakes that young countries make. We're trying to find our feet. I think one of the challenges that we have is for government, and whichever side of the political divide it is, to really establish itself and find its philosophy when it comes to the difference between social responsibility and economic responsibility. For example, Bank of Bahamas. And if we take the challenges of banks pulling out of the family islands, does the government, as a majority shareholder, direct Bank of Bahamas to move into those family islands, when at the same time it's a public listed company with minority shareholders? If it moves into family islands, it's going to incur losses. So what is the government's responsibility? Is it a responsibility to the people in the family islands, or is it a responsibility to the minority shareholders? And the answer is it's both. So how does the government balance that? And I think we're still in that phase of trying to establish just where we want to be. And again, mortgage relief, if we take that as an example, which I think Mr. Ryder referred to in passing. I don't think anybody in their right minds wants to see Bahamians lose their homes. But you have to understand the responsibilities of where there's commercial contracts have been entered into between two entities, and then you're going to come along in the middle of the game and change the contract. That introduces uncertainty, and you know that the one thing that business does not like is uncertainty. So now if you look, what's the position of the mortgage market now? Well, we have to really wait to see what's going to happen with court decisions on the Homeowners Protection Act, because it could very easily and simply destroy collateral value that the banks have in mortgages. So the question is why is a financial institution today going to advance a mortgage to a borrower when they're not sure how solid that collateral is? And the answer is that they're going to be very cautious about it. And this was one of the things that the CBA had discussions with both the former and current administration about our concerns. Yes, the intent was good, but what are the unintended consequences? And unfortunately, you don't discover what they are until you actually get into the process.
I'm glad you brought up mortgage relief. I mean, because that has created, as you would have said, a lot of uncertainty, because people have a responsibility to pay back these loans. And we have, in many instances, developed a culture, I don't know if there's a correct way to put it, but it appears in many instances that we abdicate our responsibilities as consumers at the drop of a hat.
I think back to my time in Scotia and back to about 2008 when we had the bubble burst and the real downturn in the economy worldwide, and the impact it had on mortgages. I think from that time to now, banks in the country have been experiencing severe pressures because a large part of their lending portfolio has been underwater. That has caused the banks to, among other reasons, some of which Ian has already mentioned, to really refocus on where and how they're going to engage in this economy. The banks, with the best intention in the world, are not going to take risks in an environment in which there is increasing uncertainty. And the mortgage relief program has produced that uncertainty. The banks are not going to move into areas where they cannot be reasonably assured of a capacity to make profits. The banks, and this is part of what I see as a fundamental change in our economy and banking in the country right now. The banks that have traditionally been at the forefront of providing these services in our market are answering to a different set of drivers. It was mentioned, 110 years ago, Royal Bank was in the Caribbean doing business, and they were. So was Scotia. Scotia Bank was in Jamaica before it was in Toronto. The Canadian banks had a huge early investment in this region. They were the banks for the region. But now they're international banks. They're answering to a different set of drivers, and they will continue, I submit, to make adjustments that assure their profitability rather than ensure the development needs of the Bahamas. And that's not a criticism, that's just a reality that has to be accepted and understood.
We're going to explore that a little bit more. We're at the point of our first break in the show. When we return, more on the record right after this.
This segment is sponsored by Percys Island Game.
We're gonna give you a check every week for a year. Percys Pension Plan, Island Game.
Bro, you hear about Percys Pension Plan?
Yeah, something about $1,000 a week for a year.
That's Percys Pension Plan. You could win one of 5. All you gotta do is put $20 on your Island Game account, and you have a chance to win up to 52 times.
You know something, guys? I can need one of those Percys Pension plan, because with Island Game, it's surely a guarantee.
Dream big, we will help you live it. Percys Pension Plan. Island Game, we got you. Percys Pension Plan. From the friends you can trust. If winning is a must, don't play the game you know.
Oi, I ain't got no tension, I got Percys Pension.
Count and ride this easy train at Percys Island Game.
The Exchange Bill Payment and Convenience Center. Meeting your bill payment, clerical, print, travel, postage, notary needs, and much more. More convenience, more time, more value for you. Coming soon to your neighborhood SuperValue. Why not shop, pay bills, print, mail, and notarize all in one place? Check us out at jvrexchange.com. The Exchange, coming soon to your neighborhood SuperValue.
Welcome back to more on the record. Tonight we are discussing the Bahamas' financial industry, a business dying to survive. Our guests are bankers Ian Jennings, Barry Malcolm. Mr. Malcolm, as we went into the break, you brought up a very important, I don't want to call it scenario, but it's a situation that we are facing. RBC, Scotia, CIBC refocused in many ways, not the banks that my grandparents and even parents banked with. In your words, answering to a different set of drivers. We would have both admitted that, you know, these banks have been in this region for 100 years or so. Made lots of money, but now that focus seems to have shifted. You see a contraction of services. You see the banks charging even exorbitant fees in some instances for services that we paid very little for, and it has incensed the public.
I can understand the public angst at the changing focus of the banks, but as was mentioned during the break, it's a part of the evolution and change of business that's with us and will always be with us. These banks are no longer banks just catering to the islands of the Caribbean. These are all of the Canadian banks that we have here in the Bahamas are now global banks. They've shifted their focus over the years to Latin America. They've shifted their focus over the years to Asia. And so the Caribbean represents, in real terms, a very, very small part of their income, and it represents a very, very small part of the return on capital. If I've got billions of capital to invest, and I've got stockholders who expect a certain return, do I invest those funds in the Bahamas, in Jamaica, Barbados, or do I put them in LATAM? Do I put them in Brazil or elsewhere? Mexico, Brazil and Mexico would be two prime areas of Scotia, for example, where the returns are much better. The banks must get a yield per customer. And the customer base, but I think the change with the Royal announced recently reflects that. They need to get a certain yield from a customer. And they're not going to get it from someone standing in a line for 30 minutes to make a deposit. Mm-hmm. It's not going to happen. They're going to get it from customers whose transactions produce a certain level of income in terms of fees that can be charged for the services. That's the reality. Now, juxtaposed against that is the question of what do we as bankers invest in the local economy and as entrepreneurs, what do we do to fill what is a real need? The person in Acklands, Mayagar, and Cricket Island, they need basic banking services, but those services cannot be provided in today's world by a bank that has a big temple in Nassau with 400 employees. But the services are needed, and I think as a country we have to go through that process of determining how best do we fill that void, how best do we provide the services that will allow the economies of our individual islands to have a chance to flourish and grow. That's a real challenge we face as a
because
country.
if you look at the size of the Bahamas, I mean, the Bahamas is a very small market.
Very small.
So it means that when you're looking at allocating costs, the cost infrastructure is much higher than it is in other jurisdictions that got higher populations. Added to that is that problem that we're an archipelago. So we basically have to reproduce Nassau in many different islands if the people in those islands are going to have that, with small populations. So a Commonwealth Bank branch in Nassau costs in the region of $6 million to build.
One?
One branch. $6 million. So we estimate that we need a population of about 10,000 to support our current business model. So you'll quickly see that there are very few islands outside the islands where we are that have that sort of model, that sort of population. So we have to look at a different business model. And that's really where Royal is going. I think part of the challenge is that Royal is, with their challenges and their business aims, have sort of leapfrogged a couple of steps along the evolution. I think for most people...
Isn't Scotia in many instances doing the same?
If you look at them, Scotia and CIBC are doing the same thing, but they're not making this chasm that they're jumping over of it's digital or nothing, which is how the RBC project is being presented. But what we're seeing is that everybody's been used to banks being both depository and lending institutions and also the payments institution. And now we're starting to see that especially with the fintech direction, is that payments and banking need not necessarily be the same, and in many jurisdictions they're different. And so the banks are having to make a decision, is do I still want to be in payments, or am I going to be in this traditional mode and just become a lender and deposit taker? And that's where you see now with the change in the payment regulations and the company like barriers associated with now and many others, where they're starting to come to the forefront.
Definitely we'll get, but there is a fear amongst consumers that one day they're going to wake up and an RBC, Scotia, CIBC will be no more.
Well, they will be different, and they must be different if they're going to survive as institutions. And the changes and adjustments have to be made by us as consumers if we're going to be able to have access to the services we need. I mean, Bill makes a very good point. You know, Ian makes a very good point. There's no way that you can spend $6 million in Acklands to put up a branch. The numbers should be
unless we know something. Unless they know something we don't.
And the reality is that there are very few islands of our country where that kind of investment can be justified. And even if you built it, they have to come from all over. Take a Long Island. If you put it in Long Island, you've got one institution or one structure that people have to come from many miles away to get services from. But the needs are still there. A Long Island still needs to be able to have payments. It still needs to be able to move money. And unless you can close that gap and provide those services, those islands and those economies will never flourish.
They're going to struggle.
The key for the country is to find ways to close those gaps.
Before we even get there, to what extent, though, have the non-traditional sources affected the existing banks? For instance, you have these lending institutions now that are not necessarily banks that are lending money. The gaming houses for quite some time were moving money, and people weren't relying on banks as they were, but it was a necessary service. But now, you know, the central bank, government is clamping down even on
well, this is really where you come back to Tim Ryder's comments about the legislative infrastructure. We were talking earlier about with the mortgage collapse 2008 and the slump that customers stopped paying. Well, we found there were really two types of customers. Those that we would call the financially disabled, that despite losing their jobs, they made every effort to make payments, but they couldn't. But there were also the financially dishonest, those who just looked at opportunities to avoid their obligations. And that's really where the Credit Bureau is going to play a part in the future. And we're very pleased to see that it finally got a reading in the House yesterday. It's going to take several years for that to really kick in, but that's going to be a very important aspect.
Why is that going to be so?
Because if you look at, first of all, what's happening with the what we call the unregulated lenders. Commercial banks fall under the regulations of the central bank in advancing credit. So there are certain guidelines and restrictions that the banks have to abide by. those restrictions do not apply to the other lenders. So it's a common area. For example, we talk about a loan being advanced within a debt service ratio of 45% of salary. And that's part of the central bank's guidelines. The other institutions don't have, of the non-regulated ones, don't have that burden. So what will happen is we have a customer come into us, we'll advance him credit. He goes out, he gets loans from these other lenders. He'll come back into us. He'll have a much higher TDSR, but he's
What's the TDSR?
That's the debt service ratio. That's a proportion of his disposable income, or proportion of his income that's going to the loan payment. Now, the central bank does allow us to go over the 45% if we're consolidating and reducing the burden. So we will do that for the customer. So we'll bring down his monthly payments so he's got a bigger margin that he can live his daily expenses. But what does he do with that? A large number of the customers then go right back out to these same unregulated lenders and just run up more credit, and they come back in and then they're back up to those things. And that's why part of the financial package, and we're pleased with what the last government and this government's indicated, that they will be bringing in a form of regulations to bring these people under the regulatory cap. Again, we've got to see the legislation pass, we've got to see what the regulations are actually going to be. But until we get everybody in the same playing field and the same level playing field, then this problem is going to go on.
And I think those adjustments will come. I think Tim talked about making the changes internally to get better fiscal controls and better financial controls within our systems. And I see the administration, the policymakers putting in place the regulations that will guide and govern how the smaller lenders engage in the market. There is a place for the smaller lenders, but within that space, you're right. TDSRs must be maintained. We must ensure that persons can have a debt service ratio that's rational and reasonable.
You can't be taking home $10.
Exactly.
Yeah.
And that those guidelines have to be followed, whether it's a large commercial bank or whether it's a small payday lender, and those structures have to be put in place if we're going to build and maintain.
There's a lot of this anxiety that consumers are feeling, and the frustration and the issues that they're having. Is some of this self-created because we have we backed ourselves in a corner in many instances because of the lives that we live, the things that we want, and for so long lending or borrowing money was so easy.
Well, if you look up to 2007, it was very easy.
Very, very easy.
I mean, everybody has aspirations of living the lifestyle equivalent to the US. If you look at a lot of the challenges that we have in the home mortgage market, people were basically over borrowing to build mansions as opposed to buying a smaller house, getting equity, and moving their way up. Yes, and the big challenge that we have from a social perspective is with our government employees, because these unregulated lenders have been lending specifically to government because of the deductions, because there's there's great job security. So now we're in a position where, as you mentioned, we have a lot of government employees have very high deductions off their salary. They can't live off their salary, but we have to find a way to ease them down. And it's not something that you can just say tomorrow, okay, in future everybody's got a 45% maximum deduction, because some of these people are 70 plus. We've got to manage to work it down. And that, again, is another challenge for government.
Gentlemen, if you can hold that point. We've reached the midpoint of our show. Our topic tonight is the Bahamas' financial industry, a business dying to survive. We are here with the Clearing Banks Association President Ian Jennings, as well as former Scotiabank Managing Director Barry Malcolm. When we come back, we're going to look at the future now of our banking industry, looking at the offshore sector, as well as the role of our domestic banks. Stay with us. More on the record right after this break.
This is an exciting time. We're launching a new and amazing app. It's all about the customer experience, and this has actually been in play for quite a while now in terms of the development and getting it ready for this moment.
We've set out a very clear agenda in Alive that the smartphone device, is going to become the center of everybody's life.
All you have to do is to be a customer of ours, and you can get this app and you can enjoy and have access to our network to be able to watch and view a number of channels, as much as 51 channels.
The Rev Go product, building on the great platform that Cable Bahamas and Rev have put down over many years, is the start of that journey to people truly living their life through their smartphone.
And it's going to make the experience more enjoyable, more easier for people to access channels. So we can't wait to get to phase 2 to launch that to our customers as well.
And it's fantastic that the Rev team has brought this to life so quickly in Alive's evolution.
Live the HBO Go experience. Online service with HBO's most selected content at your fingertips. Obtain the HBO Max package now and get the 3rd month free and start enjoying from any mobile or computer all episodes of your best series, blockbusters, and so much more. Make all the content from HBO yours. HBO Go is HBO wherever you want. Sign up for HBO from Rev and be entered to win an all-expense-paid trip for 2 to Hollywood to visit your favorite HBO set.
And welcome back to the second half of tonight's show. Our discussions are with bankers Ian Jennings and Barry Malcolm. Our topic, Bahamas financial industry, a business dying to survive. I want to make a slight correction. Mr. Jennings, you are the chairman of the Clearing Banks Association, and the president, as we formerly called you. But as we went into the break, we really were looking at, in many instances, how we've created this situation with lending and the borrowing, and what was, I guess prior to the financial collapse, it was very easy for us to do. Money moved around the Bahamas.
Credit was much freer, yeah.
People lived a different kind of life, but we're now in a new dispensation. The banks are contracting services, locations, etc., giving rise to a lot of anxiety. Because there was a time when Mama, who lived in Lower Bogue or lived in Dumfries, could do her banking because of the 1 or 2 institutions on the island. That is no more. That reality is quickly changing, giving rise now to the question of how do we continue to provide essential banking and financial services to our family islands, especially.
Before I go to John, just a very quick comment on earlier point you made, which had to do with the need for adjustments. Okay, the credit is different now. The demands are different now. The growth of the economy is different now, and so I think, as a general statement, I think all of us, nothing has been learned over the last 8 years. For all of us, is one thing has been learned: you have to cut your cloth, or build your suit according to the cloth you have.
Do you honestly think that we have learned that?
We're learning it. We're learning it painfully. You mentioned the stress that many people are in. I have gone and I've experienced over the last several years. That's going to continue unless and until we make, as was mentioned in the article this morning, hard choices. We have to adjust. The world has changed. The demands are different. The reporting requirements are different. The capacity to earn is different. The competition is greater. And unless we make adjustments as a people, unless we make adjustments as a country, we will continue to have challenges that are greater than they need to be. That's just a basic fact of life. But to address your other question, within the islands, adjustments have to be made there too. I mean, when I was in Scotiabank 7 years ago, we had 2 branches in Long Island. We had 3 points of presence in Exuma. That's not the case. Royal Bank has adjusted, SCIBC has adjusted, and the footprint in all the islands has shrunk. And I submit will continue to shrink. because they cannot get, as I said earlier, the yield that they need to get to satisfy their shareholders from these islands.
You are working.
We have to make changes.
You are working with an institution that is looking to provide a particular service or a need to fill some of those needs in those islands. And why is that so important? And is that now going to create a whole new industry and market?
Yes and yes. It's important because I think it represents young entrepreneurs within the country crafting solutions that are going to provide and service needs within the islands of the Bahamas. A Long Island that lost basically all of its banks still needs to have banking services. You cannot build those banking services, as was correctly pointed out a short while ago, by building a $6 million edifice. It's not going to happen. But the banking services are needed. So with that void and with that need still being there, we have to find, and ways are being found to bring the services in a different format.
Like?
So instead of building a big building, you partner with individuals who have a point of presence in the islands already. You put in place systems that allow them to make payments. You put in place systems that allow them to receive payments from Nassau. You put in place systems that allow them to pay bills, whether it's pay their mortgage or whether it's pay a power bill from the island. So you use the new technology, the new digital technology to put in place these systems. And I see it as a powerful opportunity within the country, because you will find entrepreneurs stepping into that space, building platforms, rolling out payments platforms, providing digital payments using cell phones and other devices, all of which can be done now. 15 years ago, the technology was not there. But the good thing is, while we're losing the big banks in the small islands, technology is making it possible to service those small islands with big bank type of services digitally, and that's the real magic. And the good thing is we have Bahamians partnering with others who are in this space and providing services. I think it represents a huge change for the better in the country, and I think it will produce benefits.
And then if you have those payment systems being able to pay into banks,
bingo,
and the banks then have the mobile applications that the Royal have just launched, that gives people wherever they are banking opportunities. Absolutely. And banking exposure. Yeah. But the difference is we're going from a cash economy to a digital economy, as I mentioned. We're missing out the check-based economy. The Bahamas has never really been a check-based economy. Right. And it's unfortunate to the extent, again, you come back to some questions about education, is that the people who are really finding the greatest need to make this step are the people in the family islands. Correct. That have not necessarily had the same exposure and benefit to internet and online systems that the people in Nassau have had. Yeah.
To a comment that, again, Tim Ryder would have made this week, he says, Bahamians have been asking the banks to slow down their digital rollouts. Given the speed at which the world is changing, the current situation means that we cannot be slowing down. We need to be speeding up.
True.
I think the big difference from a business philosophical point between many of the banks, which would include Commonwealth and what IBC is seeming to doing, is that we view our business, our customers as segments. So we have some segments who are the traditional cash-based customers. We have some who are the millennial early adopters, and then we've got groups in between. So for some of those people, they're the ones who want to be on the digital. They're looking to move to digital as quickly as possible. Others want to be cash-based. They want to stand in the line. They want their savings passbook. And then you've got the other people in the middle who really don't really care whether they're using cash or whether they're using digital. They just want to use whatever is comfortable. In Royal's case, again, from their business model, and again, it's each one of the clearing banks has a slightly different business model, so they're looking at different niche markets. We're not all the same, but with Royal's business proposition, they're looking at jumping from basically cash to digital in one jump.
The concern always is, and and I say this all the time, that we introduce these things into country, into industry all the time. It's a wonderful idea. And then after we've introduced, the question becomes, who is regulating? So with now the proposed introduction of these services that banks were offering, this new dispensation, this new digital world, who is keeping watch? Are the particular or are the specific and proper regulations being put in place? And are the regulators, are they in place now to ensure that at the end of the day, the consumer is protected?
I think we can say very strongly yes. The services that are being developed to address the needs in the Family Islands are services that are regulated by the central bank. And the clear guidelines are set for these enterprises that are going into this space as MTBs, money transmission businesses, and so the central bank with digital systems can very closely track and monitor and see the movement of payments, the movement of funds within a given space. And so there can be no skimping on the regulations because you're dealing with people's money. You're dealing with what I think will prove to be a very critical part of the new economy in the Family Islands. So the central bank rightly is very much in the middle of it, and in fact I would say the central bank has been encouraging, if not driving, some of this development and change to provide these services. If you go from Bimini down to Inagua, there's been a loss of the traditional banking services. The services have been lost, but the needs have not gone away, and so those needs have been.
So we're going to be creating a whole new industry very soon.
Yeah, and it's a new industry, and technology gives us a lot of advantages to move in this space, but it's not necessarily, it's not insurmountable. I mean, if you look at Africa, M-Pesa, which is really the most successful digital payments enterprise in the world. They're 8 years old, and they're now a $1 billion enterprise, and in many parts of that continent, a big chunk of the funds moved from whether it's payment for a basket, buying a loaf of bread, payment for gasoline, has been achieved through collaboration between banks, telephone companies, and entrepreneurs to build that service. And I take Ian's comment about the early adapters, and there's some people who are more facile with technology. Yes, but necessity drives. 5 years ago, grandmothers weren't going into gaming houses to send money to Nassau, but they had to do it because they had no choice.
Changed, yeah.
You give the market.
And if you think about it, we've got to go to a break. I mean, you look at North America. I mean, Apple Pay. This has been happening for quite some time. People have been using mobile devices to do these kinds of things.
It will come and it will be adopted. I'm convinced that it will be.
Well, definitely something we will be watching very closely. We are going to take our final break. On the Record will continue right after this.
We're gonna give you a check every week for a year. Percys Pension Plan, Island Game.
Bro, you hear about Percys Pension Plan?
Yeah, something about $1,000 a week for a year.
That's Percys Pension Plan. You could win one of 5. All you gotta do is put $20 on your Island Game account, and you have a chance to win up to 52 times.
You know something, guys? I can need one of those Percys Pension Plan, because with Island Game, it's surely a guarantee.
Percys Pension Plan. Dream big, we will help you live it. Percys Pension Plan. Island Game, we got you. Percys Pension Plan. From the friends you can trust. If winning is a must, but play the game you know.
Oi, I ain't got no tension. I got Percys Pension.
Count and ride this easy train at Percys Island Game.
Rev Go Play, the new mobile app that delivers your favorite live streaming TV channels, is here, and it's free to all Rev TV subscribers. Download the app from the Bahamas iOS App Store or Google Play Store. Launch the app and log in with your My Account email address and password. The TV Everywhere revolution you've been waiting on is here. Rev Go Play. Go everywhere with Rev Go.
Sign up for Rev Go Play and win a trip to the 2018 Sobe Food and Wine Festival.
Welcome back. This is our final segment of this episode. Our topic tonight is the Bahamas financial industry, a business dying to survive. My guest, Ian Jennings, Barry Malcolm. Gentlemen, we have talked largely about the domestic banking sector, with the commercial banks. These are the banks that we're interacting with every day that we see. But there is something happening on the offshore side that I think a lot of Bahamians are not aware of unless you're directly involved. A lot of the offshore banks have closed very quietly. Obviously, if you drive by an RBC or a Scotia closes, you see the impact of it. But a lot of these banks have been contracting in size or outright closing down. And again, these institutions were responsible or are responsible for the creation of this very large middle class that we have, and the lifestyles that a lot of Bahamians have adopted. You would have mentioned earlier, these institutions were able to pay people very good salaries, put them in excellent financial positions, but even now that industry has taken some major hits and continues to.
Yes, I think we were talking earlier about challenges of international pressure. Even if you look at correspondent banking issues for the offshore banking sector here, the offshore sector still has to bank locally and still then has to clear through international correspondence. And one of the pressures that the correspondents are exerting on the local banks is offering correspondent services to other banks and other institutions. The challenges that we've had, the experience with withdrawing of correspondent banking services, there's not really been any relation to the size of the Bahamian market or challenges from the Bahamian market. It's been a review of the whole Caribbean, and services have been withdrawn. And so again, where there's risk, the domestic banks don't want to be endangering their correspondent relationships, so they're making it more difficult for these offshore banks to have accounts with them. If you look at the issue, we talked about the euro-dollar market, how that's changed significantly. But if you also look at what's happened with the Swiss banks and their position, how they've been impacted by proposed litigation and changes in legislation, that privacy in the Swiss banks is almost a thing of the past. So the business norm for the traditional reason for those offshore banking sectors has disappeared. And that's where, if you look and see what the work of the Bahamas Financial Services Board's been doing, is trying to recreate the industry with new products, looking at new markets. Latin America has been a prime target because really the North America and Western Europe now is very much on tax revenue.
The Asian market is very lucrative as well. Eh? There's been some focus there.
As risk has increased, Dean said, and the pressures from the OECD and other agencies of really tax collection with the developed countries, the banks here have come under enormous pressure. The reporting requirements, the exposures to fines they face if they get it wrong, the loss of privacy, particularly in some ways heralded by the European and Swiss banks particularly. Again, it's not going to go away. It's part of a fundamental change, and I think there will continue to be niche areas where we can develop services, international banking services, but the tightening will continue. There's no two ways about it. It will
you
continue.
Consider the regulations, the OECD factor, but then you have a Cayman Islands, in some respects refusing to comply, but still seem to be doing okay. How do we explain that? And should we have taken that route?
The pressures on the Bahamas, and I go back. I'm going to go back to Ian's question very quickly comment very quickly on our correspondent banking. The banks that are operating here all have to settle by going through a correspondent bank not here. And if they're not seen to be totally in compliance with the requirements that really is defined by forces beyond this country, they run the risk of not being able to settle any Bahamian or any movement of funds from the Bahamas. So the hegemony in the whole of correspondent banks on the Bahamas, and there's been a lot of attention paid to us by the international organizations. It's very real. And we can't get away from that in the present dispensation. A shameless plug for Commonwealth Bank, and certainly in terms of offering services to the local industry or the fledgling services that will be provided by payment companies that are regulated is a great thing. But to be able to provide that service to Bahamian enterprises to service the islands of the country, they really had to get sign-off in some respects from their international correspondent banking, even though you're talking about a $dollar denominated kind of service. But they took the plunge and they did that. It's commendable, but it speaks to the need and the pressure, the need to be fully compliant, the need to be able to demonstrate it internationally, and the continuing pressure that banks in the country will face through the correspondent network. And they've got to be in business, and so the pressure to comply, the pressure to be very, very transparent in how you conduct business is not going to go away. And it will be very much a part of our future.
Will we ever see a return of, if I can use the term, glory days of our financial services sector, or are we entering such a different era that it will almost be unrecognizable?
I think you're working your way towards the latter. I think one thing you made the comment about would there be days when we see RBC, CIBC, Scotia leave, and well, if you think back, we've seen Barclays leave, we've seen Chase leave, we've seen other banks leave, and we've still got banks here. But the truth is we're still overbanked by population size, but there's still need for niches. I mean, if you look at Citibank today, I mean, Citibank has a very specific niche. It's just not out there for the general customers or the general population. And the probability is you're going to see the Canadian banks move towards that sort of model and pull back. I think the one thing that we would obviously say from Commonwealth Bank's point of view, and also from Fidelity and Bank of Bahamas, unlike RBC, they don't have to. We're not concerned with being in the Bahamas for a different country's best interest. We're Bahamian organizations.
You have nowhere to go.
We have we're fully committed.
Indeed.
And the history of Commonwealth was that when we started, because we started serving a niche that the other banks wouldn't serve. So we're going to be here. The form that we're going to be in, I think we've outlined that it's going to be an increasingly digitized world. Obviously, in the last few months, you've seen Bitcoin and these sort of things being discussed a whole lot more than you've probably ever heard of being discussed in the Bahamas. Is it the way of the future, or is it a speculative bubble where time still has to tell? But it opens up an avenue of maybe banking without correspondence to such a degree. As a jurisdiction, we have to find a way to eliminate our dependence on cash. Even operating a branch in the Family Island is very expensive just from the purpose of shipping cash to and fro.
Moving cash around, yeah, absolutely.
So I don't think you're necessarily going to see the glory days in the sense of the large numbers of people employed in banking. I think you're probably going to see it become a more specialized area for the technical banking skills, but it's always going to be there, and it's evolution. I think that the one thing that we have to recognize is that we cannot stay in, whether it be 1970 or 1990 or 2010 or 2017. We're going to change. Even looking at just around in the shopping environment, we never used to have freight forwarders. Now we got freight forwarders because people are buying online.
Change will be enormous. If I look over the next 5 years, I expect to see, as Ian mentioned, niche players or rather than niche, the banks will find their own area of specialty and interests where they can make money and have relevance in this economy and in a larger world economy. I think you will find in the Bahamas that we, particularly with the support and driving of the central bank and with the proper regulatory oversight, we will be providing solutions for banking services, whether it's payments, whether it's digitized movement of money throughout all the family islands. And I submit that the proper use of technology with the engagement of young companies that are prepared to and are able, because of their size and their focus, to provide services in a different kind of way, you will actually see in time a net growth of banking services in the family islands. It won't be the big bricks and mortar stuff, but it'll be nonetheless an effective means of providing the needs that an Anagua or Mayagua or Long Island needs to drive the economy.
Well, that's good, and I'm sure the people of the family islands especially will be very pleased to hear that. Gentlemen, thank you so very much for coming on tonight and speaking with us. We hope that we have been able to bring some sense to what is out there and a lot of and begin to ease some of the anxieties that a lot of our people are having right now when they look at what's happening on a daily basis and understand that there's a lot going on. There's even more going on beneath the surface. It's not just about the what you see and the optics of it. So gentlemen, thank you very much for coming on tonight. We appreciate it.
My pleasure.
Hope you have enjoyed our show tonight. Special thanks to our guests, Ian Jennings, Barry Malcolm, as well as my producer, technical staff, and of course you, the audience, for watching us week after week. Be sure and join us for more On the Record next week, same time, same place. Once again, I'm your host, Jerome Sawyer. We'll see you next time.